that are starting to watch this live stream, give me a second, folks. Doing a Lead Lag live episode very early in the morning, Eastern Standard Time, which I guess is a good thing because it means my mind is fresh for what should be a good conversation here with Chris Aaron. Just give me a second, folks. I want to make sure everything's live here. Please, if you happen to be watching this, do me a favor, like, repost if you're on X, comment if you're on YouTube. I am going to try to take some live questions, so I'll be able to see what you're saying. I can pop it up on the screen, so don't hesitate to engage that way. Appreciate those that support the show. As I always emphasize, I don't make money off of this. This is meant to just be a way to increase the content with thoughtful people like Christopher Aaron here. I'm actually very much excited for this conversation, given his unique CV, is I think one way to say it. So with all that said, my name is Michael Guyad, publisher of the Lead Lag Report. Join me for the roughly 40-minute time period is Mr. Christopher Aaron. Chris, you have a really unique backstory, which I wouldn't normally think of when I see your profile and your love of gold and precious metals in general. But introduce yourself to me and to those that are watching. Who are you? What's your background? What have you done throughout your career, throughout your life? And how did you make this transition into the investment side?
Yeah, thank you so much, Michael, for having me. Basically, my career began in the military intelligence world. I was a 9/11 generation. I was junior in college when the attacks happened on the World Trade Centers, and so that was really a formative period in my life. I wanted to do something in honor of my grandfather who fought in Europe during World War II. I wanted to fight the good fight for my generation, so to speak. And so, I wasn't ready to enlist in the military itself back in 2003 when I graduated from university, but I wanted to go into that field. So I joined one of the military intelligence agencies. They ended up sending me to Afghanistan. There was sort of a lateral opening. Once I was in one of the first agencies, I spent some time at the CIA. I was in Afghanistan. I was in Iraq, 2 deployments, a total of a year overseas. And really, this was like 2006, 2009. I just rewatched The Matrix, the original one. I hadn't seen it in like 20 years. And when I was overseas, actually, in my second deployment, I had this sort of awakening moment. Also similar to, we think about 1984, the main character who has this, he's part of the inner circle, so to speak, or part of the machine, and he has this awakening. In my own way, seeing the war with my own 2 eyes and participating in it. I worked on the military drone program, but I was with the soldiers, had a gun on the military base, seeing it, participating in it with my own 2 eyes really resulted in a level of an awakening for me that I was not expecting. This was my career right out of college. Long story short, I went through a real tough period back in 2009, 2010, sort of a dark night of the soul, having to re-find myself. What is it that I wanted to do with the next part of my life? Given that I no longer felt that I could support the direction that the wars were going in. Not that I'm anything less of a patriot. I love this country. I love the freedom that the United States stands for. But I saw, again, I'm going to come back to this theme with my own 2 eyes, that what I was being told from the politicians and from the mainstream media was not what I was seeing on the ground. And I just said, I can no longer align my life and my career with this type of trajectory. So I just took a huge step back, took some time off, and I said, what is one of the solutions? What's one part of the solution to these unwinnable, unsustainable wars that we in the West continue to engage in every 5 to 10 years when we look back throughout the last 100 years? What's one part of the solution? One part of the solution is a currency that is not fiat in nature, that governments can't print and distribute to favored groups, military industrial complex, banking consortiums, et cetera, et cetera. So I shifted my entire life, aligned it with precious metals and market analysis.
That point about the narratives that the media gives and that politicians give versus the reality when you're on the ground, I think is is interesting. Do you think it's always been like that, or is there something about modern communication, about technology, about large data that creates even more of a distortion of the story versus the truth?
You know, if I was alive and had been drafted during World War II, perhaps I would have a different take on this, or I would be able to compare. Unfortunately for our generation, the only thing we can do is read the history books and watch the documentaries. I mean, and maybe listen to a few of the people that actually fought that good fight. To me, it's very difficult to compare what I lived through to some of the more righteous, let's say, conflicts that we've engaged in over the last 150 years. Um, but I will say that there is this theme that I've really embraced, and it applies to the markets as well. But really, the theme is not trusting per se what one is told just at a surface level. There's a lot of people trying to sell stories. They're selling stories about wars, stories about markets, stories about various industries that are going to rise or fall. When you observe things and look at them with your own two eyes and make your own decision, that is the most powerful way to be a human being on planet Earth. And the way that this then gets into the markets, what I've gravitated toward as far as analyzing markets, is price analysis, technical analysis, as some people call it. But I simply call it reality analysis. I mean, the price is the reality of the markets. Everyone else is sort of trying to sell stories about what may happen in the future, and I prefer to analyze price as the closest thing to reality that we have.
So, as you know, it's interesting when you're trying to figure out what the price of various precious metals should be, because there's no clear valuation metric, right? In the sense of you don't have a cash flow when it comes to looking at commodities versus companies. And you and I both know that the price is purely subjective no matter what, because it's whatever somebody's willing to pay, right? Let's talk about the field of technical analysis when it comes to commodities versus other asset classes. My father used to be a technician himself, and he always made it a point to say that price is a reflection of all the wisdom and ignorance of the crowd. And you don't know if it's more ignorance or if it's more wisdom, right? Except maybe with
I
hindsight,
agree.
right? So how do you know if price is truth, I guess, when it comes to gold, precious metals? We'll get into some of the analysis, but let's go through that because I think that's really critical.
Yeah, the way that you know whether price is truth or price is sustainable, let's say, is that if it's not, you will see certain signatures on the charts. You will see false moves in one direction, let's say a breakout higher or a breakdown from a consolidation, that then will quickly reverse. That's one signature that I've learned to make note of, that shows me that a market was fooled, a market was wrong at a key turning point. For example, if we go back to gold, if you think about what's just happened here, let's just talk about the last 5 years for a second. We've seen basically a consolidation in the gold price between 2075 on the upper side and 1680 on the lower side, to talk about spot prices. 4 years of this consolidation in a fairly wide band. But if you go back to September of 2022, so a little less than 2 years ago, there was a violation of that very clear lower support, 1680. It violated that for about 6 weeks. Now, it didn't plummet, it didn't collapse, but it violated that. And it looked like, hey, this is a breakdown. It looks like we've just seen a big topping pattern here. But so the wisdom of sort of the markets, when is it a real move, when is it a fake move, is staying with it. Even if a market gives you a bad signal, a breakdown, staying with it. Is this a legitimate signal or not? In the case of gold, we fast forward 6 weeks into late October of 2022, when gold recovered that 1680 level on a weekly close. I said to myself, hey, that past little breakdown was a false move. It was a false move to the downside. And then, from studying technical analysis, we know that from false moves come fast moves in the opposite direction. And so what did we see? Like a $450 move higher in 6 months following that breakdown. So I would just say that, Michael, there are these signatures, and no one's going to get it right 100% of the time. Not myself. I make mistakes as well. All disciplines have their blind sides. But when we try to focus on these signatures, that can at least help us to sift through the legitimate moves from, some of these fake moves.
Okay, now, of course, you're talking about it from a trading perspective, and since you mentioned 2010, 2011, kind of you started doing that pivot, that was around the time that gold roughly peaked, right? It was I think 2011, 2012. I used to write for MarketWatch.com, and whenever I would put an article that was slightly negative on gold because I thought it was nearing some kind of a peak, the gold bugs would come out. If you remember back then, the gold bugs of then are the Bitcoin maxis of today, right? Sort of extreme sentiment, the insulting, you're wrong, this not system's gonna collapse, and all this stuff. Talk about that period of nothingness. So you obviously meaning sideways action largely, right? Because it's only now that gold's starting to get interesting, but it took a long time to get to this breakout moment.
Yeah, and I'm not a perma bull on any one asset class. I was not in the precious metals markets at all from, call it late 2011, after I saw that very clear impulsive breakdown, through 2015. I started publishing, this current business in 2015. I didn't get the bottom exactly right, but I got it within about 3 months. I was looking at that longer term support around $1,000, saying, hey, risk to reward, this is probably a good place to start getting involved in the precious metals markets. So that call kind of has lasted through the present moment. We've been in this rising trend here for the last 9 years. This cycle is going to top. Eventually, this cycle is going to top as well. And then it will no longer be appropriate to be as aggressive in the precious metals or to be focusing on it nearly as much as I have been. And I have to separate, there's two sides of me on this. One is I have a philosophical side, right? Based on what I experienced in the wars, what I saw as far as government excesses, that is only really possible in an era of uncontrolled fiat currency. And so philosophically, I support, hey, if there was going to be a referendum and I could put my signature on it or vote this November to go back to a gold standard, absolutely I would do that. Or some other sort of hard standard. Absolutely I would vote for that. However, as a pragmatist, as a technician, I can also tell you that there are going to be times, even if I would support gold going back onto a standard to back the US dollar, there are going to be times where gold is simply in a bear market because other asset classes are in favor for 5 years, for 10 years, even for 20 years. Look at 1980 to 2000. Was there inflation the entire time? Of course. Were they debasing the currency? Of course. But gold was simply out of favor because other markets were progressing. So I have those two sides of me, and that's okay. I don't think we need to be perma-bulls on any one asset class. I'll simply say that for the time being, I have a target of 2,535 for gold. It's about $200 higher than we are today. And I have a target for silver, assuming it can stay above 30 here and consolidate. I have a target of $42.50. Those are my official targets. We could overshoot my targets by, a little bit, a few more months. Silver could get back to 50. Gold could get into the upper 2000s, maybe even print a 3 handle. But after that, I'm looking at seriously taking some major chips off the table and saying, what is the next asset class that is going to emerge? And I fully admit I don't know what it is yet. And I'm going to say, market, you show me.
Since you mentioned cycles, what do you think has the potential for a longer cycle? Gold, silver as commodities, or the mining stocks? Now, I'm saying that purposely because the reality is the mining stocks, yes, there is some relationship to the underlying commodity, but not necessarily, right? I mean, they can move based on other things in terms of management, in terms of new discoveries, in terms of how oil impacts extraction. Talk about the mining side, and if you think there might be some more longevity in terms of the trend playing out that way.
Yeah, you know, and the mining sector has been so disappointing in this entire cycle. You know, the GDX, just as an example, I mean, the GDX is trading in the low 30s. What did it close at for Friday? Closed at 35. I mean, this level was hit. I mean, in 2016, the GDX peaked at 32. At that peak of 32 for the large cap gold miners, gold was trading at $1,300. So gold has risen by $1,000 in the last 8 years, and the large cap miners are trading at exactly the same level as they were trading at when gold was $1,000 lower. So the mining business has really underperformed the metals. Um, there are a host of reasons why this is the case, but I'll make the point that I believe the main reason, I believe the evidence support this, is that as we've seen the price of gold more than double in the last 10 years, the general equity market has also doubled simultaneously. If you go back to 2015, Dow Jones Industrial Average was half of what it was today. It's now doubled. And this is the first time in history. I've gone back and looked at every precious metals cycle since freely trading gold in 1971. This is the first time in trading history for gold that both gold and the general equity markets have doubled simultaneously. In each of the previous bull markets for gold, you've had general equity markets contracting. 1970s, general equity markets were falling the entire time. 2000 to 2011, there was a lot of volatility, but that period sort of ended with the global financial crisis into 2009, right? So coming back to the mining sector, the reason why the mining sector has been so underperforming here for the last number of years is because the average investor who in previous cycles would have looked at their 401k, or in Australia their superannuation fund, or Canada they have the same thing, retirement funds. The average investor that in previous cycles would have seen gold outpacing the stock market and saying, hey, I should move some of my assets into gold because it's been outpacing general equity markets for 2, 3, 5 years. That investor has been completely absent the precious metals market in this cycle because their 401k and their index funds have done just as well as the bullion price. So there's hardly any speculative bid in the precious metals sector whatsoever. And as a result of that, the valuations on the mining companies have compressed to a level that has never been seen before in the history of mining stocks. I'm talking about companies that have measured and indicated gold on their balance sheet that is trading for $5 per ounce in the ground. And you just go back to the previous cycle, and gold at that stage was trading for $50 to $100 in the ground when bullion prices were the same as what they are today. So you had a 10 to 20x multiple on the valuations of gold in the ground, simply when psychology was higher than it is today on the overall sector. So I mean, from a reward to risk perspective, I would say right here, if someone's looking at this and saying, hey, I have discretionary capital, this is not my emergency fund, this is not my savings account, to put a down payment on a house, but I'm trying to maybe hit a home run or hit something really good here over the next 2 to 3 years, I would say, yeah, I mean, look, if gold goes from 23 to 2,500, all right, that's 10%. Probably people are not going to get rich off a 10% move, right? But if the valuations on these mining companies improve just off the lows that they are now, you could have a multiple from that level. So, I think that the mining sector is extremely cyclical. There are reasons why these mining stocks underperform, and there are also reasons why these mining stocks outperform at certain intervals. I'm not buy and hold on any sector in the world for too long.
Got a question off of YouTube from Michael K. I actually hadn't looked at this until I was literally just Googling it as you're chatting. What does Chris think about the growing number of states that have removed state cap gain taxes? I think it's more on the sales tax side, as I understand it, for gold and silver, and or have made it legal tender. So there is this, I think, narrative out there, which I think is valid, that governments like gold for themselves, but don't like it relative to fiat, obviously, because it challenges their authority. But it does look like, from what I've seen, there are some interesting, at least on a state level, things that are happening as far as government taxation. Any insights there?
I mean, personally, I love it. It's great to see. Certain states, the more libertarian-leaning states, are doing this sort of thing right now. I mean, in my opinion, it's an abomination that there's sales tax on precious metals. We just go back to the Constitution and we look at, no state shall coin any money that is not gold and silver. And so now here for the last 50 years, we have this experiment with an unbacked fiat currency, and now state governments, the majority of them, somehow think they can tax what used to be money. It's the state of the world that we live in now. It's certainly a step in the right direction. I'm not sure that it's going to make a groundswell of difference, but every little bit counts. So I'm happy to see it.
I'm sure you like probably most big fans of gold are tired of the debate about Bitcoin. But since you mentioned the sovereignty side and that end of things, why not Bitcoin as opposed to gold? Or is it not as simple as just one or the other to have both?
Yeah, and so similar to like what I said about gold and precious metals, I'm never a perma bull. There will come a time where this cycle ends. Yet at the same time, I could support, let's say, moving back to a gold standard from a philosophical level. When I look at Bitcoin, I'm going to split myself in two here once again, and it's going to seem like I'm talking out of two sides of my face, but I'm really trying to make 2 points that I hold strongly at the same time. So I hope people can hear me with that. One is that, philosophically, I think precious metals and crypto investors are aligned. We both see the problems with fiat currency. We see, all the waste and all the corruption that this system causes. We both want a hard standard, right? So I'm aligned philosophically with my heart with crypto investors. Second thing I want to say is I'm a trader as well. I trade futures, I trade options. I'm not only a long-term investor. And so to anyone out there who has traded or had a good holding on crypto or on any asset, I always say congratulations. I have people that email me to tell me, they traded some ETF, they had a 10 or 20% profit in a few days. I'm like, congratulations, go out, celebrate, treat yourself to something. You always have to celebrate a win. So anyone who's made a good profit on crypto or Bitcoin, hear me. Congratulations. The place where I disagree that Bitcoin can end up becoming a standard in the same way that gold has been in the past is that I disagree that the moat for Bitcoin that most Bitcoin proponents discuss, I disagree that the moat for Bitcoin is large enough to eventually prevent a leaching out of capital from Bitcoin and into all of the other cryptocurrencies. I don't think that that moat is as powerful as people believe it is right now. And so I believe Bitcoin is competing with all the other cryptocurrencies. And when I last checked, there seems to be no barrier to entry, no legitimate barrier to creating new cryptocurrencies. And so from a fundamental standpoint, even though, again, I say to anyone who's had a good holding, congratulations, I think that the supply of all cryptocurrencies trends towards infinity over the next 10 to 20 years. And anything where the supply of an item or a category is trending toward infinity, the price should trend towards zero. So I believe eventually the price of Bitcoin will trend towards zero. But in between now and then, maybe it goes to 100,000. Maybe it goes to 1 million or 10 million. I'm perfectly open to that. And I'm also open to trading it higher before I see signals that it goes and eventually trends toward that level. But that's the reason why I don't support cryptocurrencies as a backing to a national currency.
Let's talk about the macro environment. What's supportive and what's not. It used to be the case that gold would benefit from negative real rates. And here we are, and you don't have negative real rates unless maybe it is, unless CPI is way higher, inflation is way higher than the rates set by the Federal Reserve. But what is a tailwind and what is a headwind from a big picture perspective?
On precious metals?
Yeah.
Yeah, negative rates has been something, although it's interesting. If you look at, for example, when did gold bottom in this cycle? After the top in 2011, gold bottomed in December of 2015, 2 days after the first Federal Reserve interest rate hike in a decade. And I remember that specifically. I actually wrote an article about it. It's why I started publishing at that time, is because I thought the mainstream narrative that higher rates are going to be bad for gold. I thought they were wrong. I thought gold was actually going to bottom and start rising with higher rates. For example, if you look at the cycle in the 1970s, gold and interest rates track each other almost perfectly up and down. As interest rates were rising, gold was rising in the 70s. In the mid-cycle corrections in interest rates, gold would fall. So I'm not necessarily a believer that even nominal or real interest rates are ultimately the main driver for gold. For about 10 years, we had this amazing correlation between Japanese yen and gold, where functionally the Japanese yen was being treated as the same asset class as gold. They were just trading on a one-to-one lockstep for 10 years, 2011 to 2021. And I remember everyone at the time in 2019, 2020, 2021 saying, hey, look, Japanese yen is weak, we can short gold. Or Japanese yen is bottom, let's go long gold, right? And then all of a sudden here in the last 3 years, that correlation, that sort of tightness between those two apparently disparate markets has just been blown to smithereens. There is zero correlation now between the Japanese yen, or it's one of the most negative correlations that we've seen in the last in freely traded currency history. So these fundamentals come and go. Ultimately, yes, gold is a vote of non-confidence on the value of fiat currencies, ultimately. But that's like super big picture. You have to zoom out to the generational or the century time scale for that analysis, to that fundamental analysis to really be true. I'll tell you, Michael, in my later years now, I've really gravitated to the camp of all I care about is what the price is doing. And we can talk about these fundamentals until, the cows come home, but I want to just focus on the price. It's really the only thing that matters.
I want to go back to your time on the CIA end and military end, because the vote of no confidence against fiat is ultimately a vote of no confidence that debt can ever be contained. And you and I both know that one of the reasons debt can never be contained is because incentives are misaligned. And let's face it, there's a lot of money that goes to defense spending. And going back to your point about what the media and what politicians tell you versus what's happening on the ground, can we ever get to a fiscal point where things are just not as excessive when it comes to the military industrial complex? Because it seems like that is what would be the headwind against gold. It would basically be a reduction of military spending.
Yeah, I mean, this really gets into this big picture question about the nature of democracy itself. Is democracy a stable form of government, or a form of government that can really last throughout the ages? I've seen some really good debates kind of talking about how democracy is really only a temporary form of government in the big picture analysis, because once the majority realizes that they can vote for whichever politician is going to promise them the most goods from the public treasury, they just do that until the treasury is bankrupt and the currency ends up going to zero. And so, but then again, all of us are only alive temporarily. I mean, that analysis could be true, right? Where this system of just voting for whichever politician promises its constituents the most goodies, that's not sustainable. And so eventually we devolve into a dictatorship of some sort, or anarchy. That could very well be true, but maybe it doesn't happen in our lifetimes. So I think we need to kind of be open to all these ideas in the pragmatic sense. In the near term, I absolutely support, limiting our involvement in overseas wars that we're not directly involved in, where we have not been attacked directly, which has been most wars since World War II. So I would vote for whichever politician tries to limit that kind of spending. But it's not only war spending; it's also, bailing out banks, bailing out institutions. It's not only the military-industrial complex these days; it's the pharma medical complex, right? And whichever one is sort of the latest one to grab control of the politicians, I'm definitely more in the less government is better camp.
Chris, for the remaining couple of minutes here, I want you to talk about IGold Advisor, what it is you're trying to do there.
Yeah, so IGold Advisor is basically the genesis of this was back in 2007, 2008, when I was getting involved in this sector, and I saw so many of those fundamental analysts, the ones telling the stories. You know who I'm talking about. I'm not going to name any names, but the guys who tell stories, and the stories sound great. They sound really realistic, really believable, and we can be really sympathetic to the stories. But what I observed in 2008 was that we can have these fundamentals correct, and then in the crash of 2008, what happened? Silver fell more than the general stock market, more than the Dow or the S&P 500. The gold mining stocks fell. I'm not joking. If you guys think you've seen volatility, if you're involved in this sector, in the crash of 2008, these mining companies fell by 90 to 95% in 6 months. Not just an isolated one or two companies, all of them. I dare you to go back and pull up a chart from the crash of 2008 of your favorite mining stock and see how much that fell when the precious metals were supposed to be, the safety net in the global financial crisis. So the genesis of IGold Advisor was to say, it's not enough to simply be aligned with those fundamentals. We have to pay attention to what the market is actually doing. Similar to, when I was in Afghanistan, and the politicians and my military commanders were all telling me A, B, C, but really it was X, Y, and Z that was happening on the ground. I liken that to how I approach the precious metals markets. What is actually happening, not what are we being told is happening. So we do a lot of analysis on gold, silver, US dollar, stock market. Everything is related, right? You can't just look at gold and silver and think you have the whole picture. So we look at the stock market, we look at the gold to Bitcoin ratio, we look at a lot of individual mining companies that we're investing in here. And it really just stems from from my experience there in the crash of 2008. And then when I would sit with my father, who's no longer with us on this planet, but I would sit with him in 2008 and 2009 in his living room and connect my laptop to his big screen TV and simply show him what I was seeing on the charts. And I approach it the same way. I try to show people what I'm seeing on the charts. I don't get 100% of things right, but I try to approach it from as unbiased of a perspective as I'm capable.
Everybody, please make sure you check out igoldadvisor.com. Make sure you follow Chris on YouTube and X, and follow me, hopefully, as well. Appreciate those that watched, and we will see you next time. Thank you, Chris. Really appreciate it.
Thank you so much, Michael, for having me.